Have you ever wondered what the smart money in crypto is really doing, behind the scenes?
Like, what are the biggest players actually buying and building and betting on right now?
Exactly. Well, today we're going to cut through all the noise and bring you just that. We're doing a deep dive into the latest crypto market
Yep,
insights.
we're pulling specifically from a really detailed daily alpha report. This one's dated June 18th, 2025.
Our mission here really is to pull out the most important bits of knowledge from this stuff.
We want to help you understand the big trends, see where capital is actually flowing, and figure out what developments are truly moving the needle in this, let's face it, incredibly fast-paced crypto world.
Think of it as your shortcut to being, well, exceptionally well informed.
And honestly, this source material is packed with fascinating details.
Oh, absolutely. We're talking major institutional moves, some really surprising whale activity, new projects popping up, shifting narratives. It's all in here.
We've basically dissected it for you. So where should we kick things off?
Let's start where the giants are placing their bets, what the source calls smart money movements.
Right. This part highlights the big whale activity, institutional accumulation, the kind of stuff that often signals, real conviction and maybe hints at where the market's heading next.
That's a critical starting point.
Yeah.
Where Bitcoin first, the report flags BlackRock grabbing another 6,088 BTC. That's huge, valued at over $638 million.
Wow. And it wasn't just them, right?
No, exactly. Overall spot ETF inflows hit $412.2 million. It really shows this acceleration in institutional buying.
It does. But what does that kind of consistent buying, especially from institutions, tell us about how they see Bitcoin now in the bigger financial picture?
Well, it's kind of fascinating, isn't it? They seem almost unfazed by the day-to-day price swings.
Right. It suggests they're really looking at it more like digital gold. Yeah. Something foundational they're willing to accumulate even when things look a bit choppy.
Makes sense. And what about Ethereum? The insights there sound just as big.
Oh, yeah. Whales apparently accumulated $2.5 billion worth of ETH. That's the largest single-day buying spree since way back in 2018.
$2.5 billion in one day.
Yep. And BlackRock was in on ETH too, adding another 6,322 ETH, about $16.1 million worth. It just speaks to this deep belief that Ethereum is like fundamental infrastructure for whatever's next in finance.
So these definitely sound like long-term strategic plays, not just quick flips.
Exactly. And Solana's not being ignored either.
What's happening there?
Galaxy Digital staked a hefty $63 million worth of SOL, apparently within just 6 hours.
6 hours.
And the FTX cold wallet got a big transfer too, nearly $40 million from Coinbase Prime. These aren't retail moves. These are serious players showing real confidence.
Okay, so for you, listening right now, think about it. What do these huge specific moves tell us about the current mood, the conviction level of the big players in these top assets?
It certainly points to a strong belief in the long-term value and utility of these core crypto assets.
But it's not just the big three making waves, is it?
No, not at all. The source also points to some, frankly, surprising accumulation patterns in much smaller niche tokens.
Like what?
Well, get this. A major wallet apparently piled into a token called Useless.
Wait. Useless? Seriously?
Seriously. Accumulated $381 9K worth. That's over 28 million tokens. And get this, they're sitting on over $2 million in unrealized profit right now.
Okay, that's wild. What does a play like that tell us? It feels like the opposite of the BlackRock BTC buys.
It's a really interesting counterpoint, right? While headlines focus on the giants buying blue chips, this useless token thing shows that even in these, let's say, less rational corners of the market, there are still sophisticated players making these super targeted, high-risk, high-reward bets. It shows smart money isn't just one thing. It's also about finding those asymmetric opportunities, maybe in places others aren't looking.
That makes sense. Are there other examples?
Yeah, a couple more mentioned. Whale accumulation was detected in NEAT, about 33K of just pure buy pressure, and another called Launcher showed strong accumulation, 28K net inflow, very little selling pressure.
So these smaller, concentrated moves might fly under the radar for most people.
Exactly. But they reflect a different kind of smart money strategy, maybe betting on really early trends or specific narratives before they catch on more widely.
Okay, so we've seen where the money's going. Big caps, some weird small caps. But the why is becoming just as important, right? It's not just about price anymore.
Precisely. It's increasingly about, actual value generation. The source really hammers this point. Projects that are generating real revenue, tangible income.
That seems like a much healthier sign for the market long term. Who are the leaders there?
Well, looking at established players, Spark Protocol really stands out. It's apparently generating $180 million in annual revenue.
$180 million. From what?
From $4 billion in allocated assets. About 23% of that comes specifically from Sparkland.
Okay, that's serious.
Then there's Aerodrome, pulling in $150 million annually. And here's the kicker. 100% of that gets distributed directly to Vero holders.
Can you just quickly explain Vero for listeners?
Sure, Vero basically means voting escrow heir of how. People lock up their Aero tokens to get governance power, and in return, they get a direct cut of all the protocol's earnings. So direct yield from the platform's success.
Got it. Real revenue sharing.
Exactly. And there are others. Tango Protocol generated $1 million in fees over 7 months, all going to stakers. Marinade is doing well too, $14.4 million in annualized revenue, and they have a huge $1.74 billion in total value locked, or TVL. Shows people are really using it.
That TVL number indicates real commitment, real engagement.
Definitely. And there are emerging plays too. A project called AirOSR apparently did $2.4 million in trading volume in just 12 hours.
Wow.
Yeah, with a 2% fee structure.
Right.
Pretty efficient. And Flash Protocol just started giving 50% of its revenue directly to its FAF stakers.
So that trend of direct value distribution seems to be catching on.
It's a very promising trend, yeah.
Yeah.
It creates real incentives for people to stick around long term, beyond just hoping the token price goes up.
Okay, this is where it gets really interesting for me. The emerging narratives, like what are the next big things people are building and betting on?
Right. First up, according to the source, is AI agent infrastructure.
AI agents. Okay, what's happening there?
Virtual's protocol seems to be leading the charge. They just launched an IP portal featuring R3HAB, the mainstream EDM artist.
R3HAB. Okay, that's a big name. So bridging crypto AI with mainstream culture?
Exactly. It's a huge step to bring these AI agents into the public eye using figures people already know.
Interesting. What else in AI?
We're also seeing AI trading agents on a platform called Stratos showing pretty solid NAV returns.
NAV returns.
Net asset value returns. Basically, the profit the AI makes from its trading strategies. The report mentions returns from like 4.3% up to nearly 11%.
Not bad.
And another AI project, Kaido, apparently pushed major algorithm updates to focus on quality content. That's crucial if you want genuinely smart, reliable agents.
Makes sense. Okay, what's the next narrative?
Bitcoin DeFi expansion.
Ah, DeFi on Bitcoin. That keeps bubbling up.
It does. gTrade, for example, launched Bitcoin-backed trading, not just for crypto, but for Forex and stocks, too.
So using Bitcoin as collateral for trading traditional assets.
Yeah, it shows BTC's growing utility beyond just being, digital gold.
Yeah.
It can actually back a wider range of financial activities.
What else supports that?
We're seeing more wrapped Bitcoin products getting traction on different chains, and institutional custody is expanding. Copper just launched support for SBTC.
SBTC, that's synthetic Bitcoin, right?
Right. A way to represent Bitcoin on other blockchains like Ethereum, but still backed one-to-one. It just shows Bitcoin's liquidity is finding its way into the broader DeFi ecosystem for new uses.
Okay, and the last emerging narrative mentioned.
Cross-chain infrastructure, making things work between different blockchains.
Always crucial.
Totally. Universal Protocol is mentioned for enabling one-to-one backed cross-chain assets, essential for smooth interoperability. And interestingly, the major DEX aggregators.
Those platforms that find you the best price across different decentralized exchanges.
Exactly. They're now apparently outperforming single exchanges. It just highlights how much demand there is for efficient cross-chain trading. People want to move assets easily.
So putting it all together, these revenue models, these new narratives like AI, Bitcoin DeFi, cross-chain, it really feels like tangible progress, doesn't it?
It really does. It's a clear move beyond just token prices. We're seeing real utility, sustainable economics, and genuine innovation taking shape.
All right, so we've looked at the big money moves and the innovations grabbing attention, but how does this all look in the sort of day-to-day pulse of the market?
Yeah, let's check that pulse. Looking at total value locked, TVL, down to maybe those whispers in the Tejan circles that sometimes hint at what's next.
TVL first.
Right.
That tells us about liquidity and engagement, right? Where's the growth?
The growth mentioned from Labs up a staggering 434% in 30 days, leading the hyperliquid ecosystem.
Wow, 434%.
Yeah. Magpie also saw a huge growth, 212%, and Hyperbeat was up 152%. Those are pretty significant signs of adoption, capital flowing in, people feeling confident in those protocols.
But it's not always up, which can also be informative. Saw rates drop?
Right. Amid supply rates for USDC dropped quite a bit, from around 4.5% down to below 3%. This was apparently after a huge $1 billion inflow into something called a plasma vault.
So what does a drop like that in a major player like Ava tell us?
It shows how these massive capital movements, even into established platforms, can really shift the internal economics, like the interest rates for lending and borrowing. Big money moves things.
Makes sense. Okay, looking at top narrative plays again.
Virtuals protocol gets another mention, leading in AI agents with that R3HAB integration, and Pendle continues to impress.
Pendle's huge, right? What's their TVL now?
Over $5 billion in TVL.
Right.
And they're expanding yield opportunities across 5 different chains now. Really strong in that yield earning sector.
Okay, now for the potentially explosive stuff, the small cap gems, under $50 million market cap. What's catching eyes there?
Yeah, this is where things get interesting for potential breakouts. Room had a Genesis sale that was apparently 800% oversubscribed.
800%.
Yep, with a projected FDV of just $1 to $3 million.
FDV. Fully diluted valuation. Remind us what that means.
Right. It's the total value if all possible tokens were circulating. So it gives a sense of the potential market size if it fully matures. A low FDV suggests more room to grow, potentially.
Gotcha. What else?
Pilot saw a 4x price jump on virtuals.io, and it has an active staking system showing community engagement. And Mixi, around a $15 million market cap, is showing sustained volume growth.
These are the ones you watch if you're looking for that next big runner, maybe.
Potentially, yeah.
Yeah.
They carry different risks, obviously. And then there are the ultra-early mentions, the stuff tracked in Degen circles.
Okay, define digging circles for us.
Well, basically, it refers to those highly engaged, often pretty risk-tolerant online communities who are constantly hunting for the absolute earliest signals on new projects, often way before they hit CoinMarketCap or any mainstream radar. It's like ground zero for spotting brand new trends, sometimes just hours old.
Okay, so what are these circles buzzing about, according to the source?
A few curious cases mentioned. KWF, the first token from the founder of Allon, currently sub $1 million market cap. Based BD, which apparently surged 30x from like 300K up to $9 million market cap.
Wow, 30x.
Yeah. GMN was trending #1 on Ethereum based on mentions. And Seraph was trending #5 on CoinMarketCap with, get this, over $500 million in daily volume reported.
Okay, so it's clear TVL shows us liquidity in use, while these small caps and ultra-early mentions, they offer a glimpse into what might break out next.
Exactly. For you, the listener, it's about understanding this whole spectrum, from established giants to these tiny early signals.
Right. Now, let's pull back a bit and look at the broader landscape. Regulation, big institutional moves, what's on the horizon. This stuff provides the context for everything else.
Absolutely crucial context. And we're seeing some serious institutional backing through VC investments.
Like what?
Gradient raised a $10 million seed round from heavyweights Pantera Capital and Multicoin Capital.
Yeah.
Eigen Labs pulled in $70 million from A16Cs for their Eigen Cloud platform.
$70 million from Andreessen Horowitz.
Okay. Prismax got $11 million seed funding, also led by A16's crypto. And XFX closed a $9.1 million seed from Han Ventures.
These aren't just token buys. This is funding the actual infrastructure for the future, right? What does that signal?
It signals a clear belief that the real long-term value is going to come from building these foundational platforms, these developer tools. Not just speculating on existing assets, they're betting on the builders.
Makes sense. What about upcoming events? Anything important happening soon?
Yeah, several TGEs, token generation events.
That's when new tokens launch and start trading.
Exactly. Room and B are launching today, June 18th. MAT is tomorrow, June 19th. And DSEI is launching sometime next week. These can definitely be price catalysts as new supply hits the market.
And speaking of supply, what about unlocks?
Also important to track, Lista has a pretty big unlock, over $5 million worth, coming within the next 7 days. And Arbitrum has a $31 million unlock next week.
So for listeners, why are unlocks a big deal? Does it always mean the price will go down?
Not always, but it's something to watch. Unlocks release a potentially large amount of new supply onto the market. If early investors or team members decide to sell, that can create downward pressure.
But if sentiment is strong, maybe it gets absorbed.
It can, yeah. Depends on the overall market and demand for that specific token. It just adds a known potential supply event.
Got it. The report also touches on market analysis and price targets for the big guys.
It does. For Bitcoin, currently around $104,970 in the report. The target resistance zone mentioned is $108,000 to $110,000, with support seen around $103,000. The key point they reiterate is that institutional buying continues despite some short-term weakness. underlying strength.
Okay, and Ethereum.
ETH, at $2,525 in the report, targets $2,650, $2,700. That apparently aligns with where some treasuries bought in. Support is noted at $2,400. And again, that whale accumulation suggests potential upside, even with some ETF outflows recently.
Interesting how those two things can diverge sometimes, whale buying versus ETF flows.
It is. And for Solana, at $147, the target mentioned is $160, $65, again aligning with institutional entry levels. Support at $140. The report also notes 76% odds for ETF approval and accelerating institutional staking on Solana.
Okay. Crucial reminder here. These targets and analyses are from the source material, right? Insights into how participants are thinking, not financial advice.
Absolutely. Essential caveat. It's intelligence gathering, not a crystal ball.
The source also mentions some tactical trade ideas.
Yeah, briefly. It highlighted potential risk-reward trades. For longs, it pointed to setups in ETHUSDT, SolosDT, and Pendley OCTT, giving specific entry, target, and stop levels.
And shorts.
For shorts, it suggested looking at alts versus Bitcoin, basically betting that many altcoins might underperform BTC, given some recent weakness there. Again, just reporting what the Daily Alpha shared with its readers.
Got it. A glimpse into active trading perspectives. Now, the really big picture stuff, macro events.
Huge developments there. On the regulatory front, the Genius Act passed the Senate, aiming to create a framework for stablecoins. It's massive.
A U.S. stablecoin framework. That would be huge.
Yeah. Also, an Ohio Bitcoin rights bill passed Committee 13-0, and Thailand eliminated crypto capital gains tax if you hold for over 5 years. These are really positive signs of growing regulatory clarity and acceptance globally.
Definitely. And institutional adoption keeps rolling.
Keeps accelerating. JP Morgan is launching its JPMD stablecoin, but on Base. Spain's BBVA Bank is advising clients to consider a 3.7% crypto allocation. And tons of other banks are jumping into the stablecoin race.
Wow. It's not just observing anymore, is it? Major traditional finance players are actively building in this space now. What does that signify?
It signifies that the walls are coming down. Traditional finance and decentralized finance are starting to properly integrate. Crypto is becoming part of the established global financial plumbing.
So, the overall market sentiment assessment from the source.
They rated it as cautiously optimistic, but with a moderate high-risk level still. So, positive outlook, but be aware of the risks. These broader shifts, though, the regulation, the institutional build-out, they're undeniably shaping the long-term future. Mainstream acceptance is happening.
Okay, so let's try and wrap this up. Key takeaways from this deep dive. First, the sheer volume of institutional money coming into core assets like Bitcoin and Ethereum is undeniable.
Absolutely. Second, there's a growing, and I think crucial, focus on projects generating real revenue, not just speculative hype. That signals maturation.
And third, the regulatory landscape, while still evolving, is clearly moving towards more clarity and acceptance, which is paving the way for that mainstream adoption we just talked about.
Exactly. This whole deep dive really gives you, the listener, a powerful snapshot, right? Knowledge that goes way beyond just reading headlines.
You've seen where the big money is moving, what innovations are actually creating value, and how this whole ecosystem is growing up right in front of us.
It really is.
So here's a final thought to leave you with. What does it truly mean for the future of decentralized finance when traditional finance isn't just watching anymore, but is actively building inside the crypto space, especially now that we're seeing clearer regulatory frameworks start to emerge?
How might that blend, that integration, redefine what mainstream crypto even looks like in the next few years?
Something to think about. Definitely worth keeping an eye on.